Staying with us, and I don't mean to spoil your holiday mood, not at all. However, economists say that prices could rise faster than they had expected before the war in Ukraine. The South African Reserve Bank is likely to hike its repo rate this week to try and slow inflation. And analyst, Professor Bonke Dumisa, joins me now to dissect this for us. Prof, good morning to you. Thank you for your time and happy Human Rights Day to you. Are you bringing in good news? I mean, for the consumer, what are we hearing here from the Reserve Bank just in terms of that repo rate hike?
Okay, let me start by saying happy Human Rights Day, and I'm not coming to spoil the mood for the South Africans.
Thanks,
and
Prof.
The Sharpeville Day played a big role for us to be where we are today. And I can say to the audience that they must not really over-panic because there are so many people pressing the panic button. Yes, there are two major statistics which are going to be released this week. One on Wednesday, the CPI, Consumer Price Index, and then the following day on the 24th of March, the South African Reserve Bank's Monetary Policy Committee will be concluding their meeting and then announcing their repo rate decision. Let's start with the repo rate decision because you've started with it. I would have preferred to start with the inflation rate before coming to the repo rate because they always in each other.
Right.
But let me start with the repo rate. The repo rate, most people believe that the Monetary Policy Committee is likely to raise the repo rate from 4% to 4.25%. And that is raising it by 25 basis points. And then there are some who are very much of pessimists who say they may even increase it by 50 basis points. I, on the other hand, say yes, the likelihood, judging by past decisions of the MPC, the high likelihood is that the Reserve Bank will raise the repo rate by 25 basis points to 4.5%. But the problem with that, now this is the negative part, is that this is imported inflation. It's not because of what is happening here in South Africa, because in most instances, the reserve banks increase the repo rate because they are trying to discourage people from taking too much debt. Because if you start taking much debt, it increases the money supply. But in this particular case, we are affected by external factors, mainly the global oil supplies and prices.
Right.
But I feel that there is a possibility that the MPC may decide to say, let's keep the repo rate the same because they understand what I've just said, that we have imported inflation in South Africa. So when you increase the repo rate under those circumstances, the only thing you are actually doing, you increase the cost of doing business and you increase the cost of living for ordinary South Africans, mainly the poor, and then that actually pushes up the inflation. So it is better sometimes to stick back, especially because the US has just raised their interest rates for the very first time from 0 to 0.25.
Right.
So why running to 4.25 as South Africans? Because that will destroy the economy. But the most that they will do, in my predictions, is that they can increase it by 25 basis points. That is 0.25%. And
okay, Prof. Due to time, you also mentioned the inflation rate. Then let's come to it because I'm running out of time, and it's such an important point that you also wanted to mention.
Yes, on Wednesday, the 23rd of March, Statistics South Africa will release the Consumer Price Index. So that is the measure in which we measure how much your money is worth, okay, the value of. I believe that they will increase, the CPI will increase slightly. It is currently at 5.7%, and it was 5.9% in December. I believe that it may be somewhere between 5.7% and 5.9%, mainly because of what I've already mentioned, the negative multiplier effects of the imported inflation from the very high crude oil prices.
Yeah, and when you talk about obviously the imported supplies of crude oil, for example, everyone is I suppose in South Africa nervous about the effects of the war as well. I mean, what can you share in terms of your views about the effects of the Ukraine and Russia war, obviously on these rates?
The Ukraine-Russia thing will only influence and affect into the inflation rate figure in April, because as it is now, we're looking at the February inflation rate, and at that time we did not have the Russia-Ukraine tensions. So the crude oil prices at that stage were just slightly over than where they were in January, but not at the level where they moved to in March. So we're not yet going to feel the effects of the Russia-Ukraine tensions.
All right. Well, we'll have to leave it then. I appreciate you speaking to us this morning, Prof. Always a pleasure. Professor Bonke Dumisa, I have to say, I love your book collection. That book on land matters. I'll be borrowing it very soon. Thanks, Prof, for your time this morning. Professor Bonke Dumisa, of course, economist, just analysing, of course, the repo rate and inflation rate for us. So with that being